What's going on? Episode 52, something, the Truth of Trading channel. Me, my little old self, just recording my thoughts and my personal trading journey. I really did not expect, when I started making this public journal, for there to be like a lot of, I don't know, I wasn't sure where it was going to go. And I just kind of find it funny because I've already put out 50 episodes. This is my 51st episode. My 51st time making a video. I've never been this consistent in anything. It's just strange. It's just very strange. But the trade I had yesterday that I was telling you about, it went just fine. It ended up being it was like $4.70 profit, but it's fine. It went totally fine. Just it went up, and then the market took a whole nother leg down, and no big deal, totally fine. I've been trading real light right now. I don't see the play. Looking on higher time frames, it's just looking like a lot of consolidation going on certain assets. It hasn't made its move yet. They always say, just to zoom out, but you don't need to zoom out forever. You just pull back, see what's going on, and you got your picture. That's it. And it's all relative to whatever you're playing, whatever time frame you're playing. Some people, they're playing daily time frames. They're playing long-term ideas, so they could care less what price is doing from now for the next 5 months. It doesn't matter to them. They're still going to sell or they're still going to buy, depending on where their asset is. They could care less, But there's a lot of money to be made on the daily market. A lot of money to be made on the daily market. Most people, they cannot believe it because they've heard all the horror stories of how somebody lost this much and somebody lost this much, A lot of people are quick to hear the horror stories, but, there's just as many people, maybe not just as many, but there's people out there that are, pulling in thousands every day, They wake up, they make a play based on their TA, it's up 2-3 grand, they close it, they're done for the day. They just made 2-3 grand in, half an hour. That seems unbelievable, but it's true. There is limitless money in the markets. I mean, it's just limitless, the amount of money that people are putting in the markets. Everybody's putting money in the markets, regardless of whether they, think they are or not. You're buying products from a company, that company's investing its profits. You're working, your 401k, that's going in the market. The market runs a lot deeper than I think most people would care to believe. I was having this discussion with someone recently, about how, oh, well, the market ain't really everything out there, I, you know, commodities are more important than the market, I don't know. That's just, to me, commodity is just a part of the market, I think this person, they were just trying to say, it ain't all about the money, man, but the more I look at it, the more it just seems to me it is about the money, it's about the bag. It's about, your portfolio's growing, your company's portfolio growing, But I don't know why I got off on a strange thought there. But the point is, the market it runs deep, and there's a lot of money in the market. And the average day Joe Schmo just can't believe that there's that much money to be made in the market, But there is. And during bear markets, say the market you usually trade, say you trade like commodities, like I said, say you trade commodities, oil, natural gas, corn, beans, say that sector of the markets, they're in a bear market. Okay, well, you might gonna have a lot of people that leave that market for a while, so your smaller movements are going to be, there's not going to be as much, as many players in the market as there normally is. In that sense, you can notice a limitation on how price behaves and how it moves, but there's limitless money in the market. So I got to get to the point. The point is you can make money. There is plenty of money to be had. Your broker, your exchange, at the end of the day, they don't care if you make money or lose money. They're still getting their cut. They would prefer for you to be a loser overall. So not only could they get their cut, they could get a little extra on top of you, by matching your trades via their robot. And you have to, you gotta outsmart the robot. Because so long as the exchanges and the brokers, so long as they offer the ability to market close your trade at any given moment, that is the one tool that we as discretionary traders have at our disposal, is the market close. Because the market open, it's not as powerful as the market close. And let me explain that. When you market open your order, you say, okay, I'm going to put $2,000 down right here to go long on this asset. And your exchange will make that order happen. However, they see that order as it's happened. And they have their own algorithm / robot that will generally place an order against you. However, if you are, very right in your decision, they're not going to be on the losing end of a trade. So if the market knows that overall, it's going to go in this certain direction, which is the direction that favors your trade, they might initially try to knock you out, but You know, if it carries you with it, then you pretty much know you're right. And you might as well hold on to that trade for a good amount of time, because you might be in a good swing trade. Because they're not going to be in a losing trade for more than just a little bit, you know. They might fight you for a minute, try to knock you out, but, you know, the robot knows generally where price will end up for the day, because all brokers and all exchanges communicate with each other. No, that's not a conspiracy, it's just the truth. Okay? They're not going to be on the losing end of trades. The retail traders will be on the losing end of trades. So that the market open is not a powerful tool as you might think it is. It's nice, you get in when you think you want to get in, but they're going to fill you how they want to fill you. That's the key. So if you want to enter in at $9, you see prices at $9.88. Okay, this is my entry. I want to enter here. You click the market buy button, market long button, open long button. Well, regardless of what the order book says, you know, the behavior of your broker or your exchange is going to show its hand on the spread. Because you might think it's not a very big spread. This is where you can't believe all the information that's presented to you. The order book in front of you, it might show that the fair value is at $9.88, and then the order book, the next order up is at $9.87. You know, sometimes it'll be a disparity. The fair market will be $9.88, but the next order to buy is down at $9.77. So if you want to market buy, or if you want to market sell, you can't sell at $9.88. It'll sell you lower at $9.77 because that's the next person that wants to buy. But the order book can play numbers with you. If you know what I'm talking about, you've seen it happen in real time if you've dealt with a lot of opening market orders. So that's the reason that the market open is not it's a nice tool to have, but it's not the most powerful tool in your arsenal, because they'll fill you where they want you to be filled, if that makes sense. And that's not to be mean or anything, it's just to be with how it is, you know. So you might not have the most perfect fill. Sometimes you do. I've had some banger entries on market orders, and I've had some sloppy entries on market orders. And it's very interesting how that mechanism and tool behaves depending on what's going on at the market at that time, and whether they will allow people to get in at any certain moment in time. But to the key point of today's episode is one of the most powerful tools you have in your belt is the market close option. So long as we have the ability to market close, to close our trade at any given second that we click the button, we have a fighting chance. We have a chance to be profitable and to take money from the market. And one of my strategies now, I never really show my hand on. I generally always have a stop, and that kind of shows my hand on where I can take the most, my uncle moment is, my ouch moment, you know. And the market loves to punish me for that. Excuse me. It loves to say, okay, here's this person's stop. This is where they're going to get out. We can knock them out, and we'll be done with this guy. But one of my tricks that I love to use is the take profit. My take profit is always, I never really show my hand where I'm actually going to take profit. you know. I would say 99% of my winning trades have never been a clearly defined take profit point. I've had a take profit point where I would take profit, and sometimes the price goes there, but 99% of the time I close it before it gets there, you know. For example, if I am in a trade and my take profit is set at, you know, $88, I'm taking profit at this point. When price reaches $10.33, that's my take profit. I'm closing my trade. But in reality, in my mind, you know, because the algorithm cannot see my mind, they cannot see what's going on in my mind. But in reality, in my mind, I'm not that greedy. If price gets to $10.11 and I entered at $9.88, I'm closing my trade in profit. You know, because in my mind, I've already established that that's kind of a key resistance area. That's the first resistance point, so to speak, on the chart. And I could care less if it goes up or not more than that, but I'm closing it at that point because that's where in my mind, I've set to close, you know. And I tend to take from the market when I do that because more times than not, in my case, when I have a clearly set take profit, it will get up to the take profit. It will get about 60-70% of the way there. And then whether I'm sleeping or whether I'm away from the charts, it will go back against me and stop me out. If I had simply just closed, you know, the majority of my trades that I've been up, you know, 50-60% on my take profit level, I'd be killing it, you know. So that's generally what I do now, you know. If I enter with if I enter and I have a $10 take profit, you know, if it gets up to $5, I'm closing it. If it's looking like it's going to roll over, I close it. You know, you want to sell big giant green candles and you want to buy big giant red candles. And I've never had a problem selling big giant green candles. It's never really punished me that bad. You know, it's never continued up to go too much farther than that. Where I've gotten punished a lot is you know, buying big red candles, you know, bottom fishing in the past. That's dangerous, you know. It's very dangerous to, you know, going long just because you see some giant red candle, you know. It's always been better to just let price make a bottom, let it come back up, and let it find a nice spot where it kind of curves up, you know. A flag, a pattern, a retest of support, you know, a demand zone, something like that, going on the long side, you know. But that's pretty much my point, you know. The market close button is very helpful, and if you're up in a trade, at the very least, just take something off the table. Take something off the table, move your stop up to break even or just below break even or just above break even. Just move it up there close to where you entered. Take some profit off the table so you're in a no risk trade. Because eliminating risk is our goal. Why do we do all this, TA? To eliminate risk. Why do we use low leverage? To eliminate risk. Why do we only trade certain days or certain times? To eliminate risk. Why are some traders more profitable than others? Because they are eliminating as many risks as possible. Because trading is a risky game. That's all I got. Peace and love. I'll holler at y'all later.